Hi guys, it has been a while since my latest update here on YouTube. Be honest with you, I'm glad I'm back, and today I would like to talk to you guys about meta platforms or Facebook, and two reasons behind my decision not to buy the stock right now. Although many YouTubers out there scream for buy on the stock after this huge dip after earnings. And let's start with the very first reason. I do think this stock is still expensive. I do have some reasons for that. I did my analysis and calculations for this stock, and my buying price for this stock would be something in this range between 175 up to $195 for a share. The current price is 220. So I do think still the stock is expensive right now. And the second reason would be our current situation in stock market. We entered bearish trend from here, and I think we have a long way to go, so we didn't reach the bottom of this trend. So I still think we have two more 1,000 points to go to the next support level. So right now I'm not in a hurry to buy some any tech stock. I'm very protective right now, so I have 10 stocks in my portfolio and 8 of them are value based, so my portfolio is bulletproofed, and only 2 stocks are growth stocks. So let's start with the first reason why I'm thinking this stock is expensive. So let's start with a big picture. We know Facebook, everyone knows Facebook. This is a pretty solid company with a strong health, financial health. You can see the company is not having any debt, and everything is covered. Operation cash flow is nice. No interest payments, so pretty nice here. And also past performance of the stock is impressive. Revenue is growing all the time, so this is definitely a growth company with very stable cash flow and also enough free cash on hand. Facebook doesn't pay any dividends, unfortunately. Management team of this company is pretty good. Mark Zuckerberg, CEO of this company for 17 years. It's pretty nice. Leadership team is pretty strong. 6.5 years. Board members, 2.5 years. Also pretty good. First bad thing about this stock, we can see many recent insider transaction, and those are sales, and those sales are from Chan Zuckerberg Foundation. So they this foundation sold a lot of stocks. You can see their whole history. They started to sell beginning in February 2021. I guess they sold a lot in 2022 as well. So this is not a good thing. If I see a lot of insider sellers, this is a red flag for me, and especially this is from Chan Zuckerberg Foundation. I mean, this is very close to to CEO of this company, to Mark Zuckerberg. So this is a first red flag for me. I don't like insider sales, but well, it happens. Those we have some other sales. We can see big institutions also sold a bit of Facebook here, some red numbers, but that's still okay. I mean, sometimes it happens that big companies want to, relocate their money, so they sell a couple of shares. That's fine. That was a big picture. Actually, Facebook is or Meta platform, sorry, it's pretty good company with a lot of cash on hand, and the one might want to ask why not buying it right now because the price is so cheap. So I did my research on this company, and I have three different scenarios. I have a normal case scenario, best case scenario, and worst case scenario. I give here in my normal case scenario PE ratio for this stock 20. I guess current valuation for this stock is, let's see, Facebook. So Facebook on Meta platform. Yes, Meta platforms. So the current PE ratio is 15. I go with 20 and I give 7 to 15% growth with $6 for share earnings. So the final price for this valuation would be $210. So why I'm taking those numbers? Well, first of all, 7 to 15%, that's very conservative. I mean, let's take a look at growth from Facebook. Right now it has 20% revenue growth. I could take 20% growth, not 15, but I don't want to take 20. I don't think Facebook will manage to do 20% year-to-year revenue growth, while taking in consideration TikTok, competition from TikTok, from Pinterest, from Snapchat, from Google, from Apple, from Amazon. Everyone is doing advertisement. So Facebook will, I think Facebook is going to have tough time doing good profit. So I'm very conservative on this point, and I'm giving 7 to 15% growth year to year. And revenue $6 for a share. We can also see this number. It was in 2019, $6.50 for a share. Right now it's 13. Again, I don't think it stays this way. I think they go back to 10. And like I said, I'm staying very conservative. I think it's going to be between 6 and 7. So according to this valuation, we have a price $210. So you can see this line here. It's fair price for this stock, I would say. And like I said, I use other scenarios. This is the best case scenario. So this is $280. You can see it here, but I would never ever go for this price. This is way too expensive, and I would rather go for this price to 210. But I also have a worst case scenario. So I took $4 for a share from previous years. You can see it here. Here between 2016 and 17, it might be that this company is having troubles, and earning per share is not that strong as it is right now. So I also take in consideration this scenario. So here $4 for a share and growth is limited. So those are three scenarios I use to calculate my intrinsic value for this stock, and based on those numbers, I have $195 for a share as a intrinsic value for this stock. So go back to this chart. We see this number is here. We see where we are right now at 220. Well, it's not far from here, 220 right now, and my intrinsic value for the stock $194. But if you know me, guys, and you saw my previous videos, I always go for margin of safety. So I take 10% from this value, and a margin of safety for this stock would be $175. So this is my a wish price for this stock. So at this point, I would consider buying it. if price is somewhere here between this and this price, I would buy it, especially if it's here. Like I said, right now it's expensive for me, especially if you consider price sales ratio and price book ratios. Those are at 5 and 5. It's still very expensive. PE ratio is attractive right now, but price sales ratio and price book ratio still high. So I'm not buying this stock, first because it's expensive in my point of view, and second, like I said before, where we are right now in stock market, this is a NASDAQ chart, and we are standing here at this point, 4,300, and we see that we enter bearish trend. So we are here in April 2020. We started very strong bullish trend up until here, and down below here you can see this indicator MACD, and this blue line crossed the red line. So this is a signal for a bearish mark. So we entered this mark at this point, and we are staying in this trend right now. So the question is, where is the bottom of this trend? Sorry. I think the next strong support would be here. So at 12,300. So from here to here, we still have to go 2,000 points. So from here to here, we also had 2,000 points. So if I'm right, we still have 50% to go to this point. It's a lot. So that's why I'm not in a hurry buying stocks, especially tech stocks like Facebook, Spotify, all those overvalued stocks. For example, PayPal was also on my list, and even after this huge dip, I'm not buying the stock. I also did a calculation for PayPal, and my intrinsic value for this company is 80. My margin of safety for this stock is here at 70. Fair price with normal case valuation would be somewhere here. So I might consider buy it here at 90, but my dream price would be something between 80 and 71. I can show you guys very fast my valuation for PayPal. Those are my numbers, and those are my final prices for this stock. So like I said, I would buy it between 70 and 71. The very first fair price for this stock is 90, 91, with very conservative valuation. So like I said, everything is still expensive at this point right now, and if I'm right, we still have 50% to go to this support line. So I'm not in a hurry to buy anything right now. My portfolio is bullet proof right now. I only have 10 stocks in my portfolio. I can show you guys those stocks. Those stickers marked with red, those are my stocks. So I have Google in my portfolio, Verizon, Baidu, Allianz, Fresenius, Skanska, Mondi, Mitsubishi Electrics, Intel, Jumbo, and I also have a gold in my portfolio. 8 from 10 stocks are value stocks. They are fairly valued, and only 2 stocks are growth stocks. For example, Google and Baidu, I consider them as a growth stocks. Other 8 stocks in my portfolio are value stocks. So my portfolio is doing right now pretty good because I don't have many growth stocks at this point. I still wait for correction in NASDAQ and S&P so I can buy cheap. Recently I sold my Nova Nordisk stock. It was also growth stock. I gonna show you guys here Nova Nordisk. I bought the stock somewhere here at $56 and $56 and I sold it here at $106 at the beginning of our correction, and I did 100 profit on this stock. Like I said, I think we are going to have more correction and we're going further down to this support. So I thought I sell my overvalued stock, so I have more free cash on hand, so I can buy more cheap stocks at this point, if I'm right, and I do think I'm right. And one more thing, I bought gold. I bought gold through iShares Physical Gold, ETC. I bought it recently at this point, at this price, $31.20 for a share. I bought 60 shares of this ETC, and I'm planning to buy more at this price, at $32.30. If we cross this price, if we go higher at this point, I buy it here, another 40 shares, so I have 100 shares in gold. And yeah, we have a very high inflation in the world, around the world, and I think gold will do pretty good, especially if you see here MFI. MFI shows increase in values or decrease in values, and in our case we can see here, and this point in October 21 we started to increase volumes in gold. So it shows me that a lot of investors buy gold at this point, and we also have here MACD indicator. Up until now we had a blue line below a red line. It means that we have a bearish trend, but it's going to be different. We have a crossover here. If this blue line is going to cross a red line, it means we are in a bullish trend. So like I said, if we go higher and we cross at $32.300 or $32.400, then we are in a bullish trend. So I buy more shares of this ETC. Yeah, that would be it, guys. Thank you for your attention and see you next time.